Okay, good evening, everybody. Hope everyone's okay. Hope everyone is well. And if you had just turned on your charts today, then you surely should be well. But I think the real question is, where actually are we? Reading through Discord, and I admit I probably don't help by contributing in Discord some of the things as well. But it can be kind of unsettling, unnerving as to where we actually are in the cycle. There's a lot of confusion, particularly sort of, our desires, our hopes, where we want price to be versus where price has actually been. And I can assure you, when I started having a look at what I was going to talk about today at about 11 o'clock this morning, it's going to be a fairly easy discussion. Price action today has kind of changed that sentiment somewhat. But I think the overarching question that I'm going to ask is that enough? Are we back, as the poll has suggested? Have we finished with the downtrend? And is it time to start getting excited and maybe brave enough to get in and have a look at our Delta portfolios? Well, we're going to have a look at it. We'll have a look at, fear, uncertainty, doubt, commonly known as a bit of FUD. We'll look at the good. We'll look at the bad. We'll look at a couple of events, blackish swans potentially on the horizon. And then we're going to enter some charting. So, bit all over the place. I don't think you can actually see my tabs when I go on the main page, but if you could, you'd crap yourself. It's like seeing that there's 180 slides in a PowerPoint presentation. There's quite a lot to get through, but I'll try and do it as best as I can. As always, you've got any questions or comments, feel free to drop it in the chat below. I only have one major question, which is actually about detail. I'll get into that a little bit later on. But other than that, let's just jump straight in. We'll have a look at the charts because actually on the face of it, Bitcoin time frame, Bitcoin chart, 3-day time frame. We'll zoom it up a little bit. We kind of came down, hit that 86,500 line. It was, whether we drew it here for convenience or it needs to be slightly above. I think on the 3-day this works here. The daily it's ever so slightly higher. But either way, we've come down. It actually looks like a relatively clean bounce from that level. And then over the past sort of 2 weeks, we have sort of continued to look to attack that 93K. We did attack it over the weekend. We lost it a little bit. And today has made an almighty low test candle, which is kind of what you'd want to see, really, particularly if you're going to run into a major support. So on the face of it, all looking actually quite good for Bitcoin. Please, don't look at the $40,000 crash that happened 3 or 4 weeks ago. No, ignore that bit. But over the last 2 weeks, we have we've gone from about 80,000 to 93. And, whether you still want to be bearish, that sort of $13,000 move over 10 days is actually still pretty good. Whether it's enough, we can talk about later on. But let's not put a dampener on today. That was actually a fairly decent day for us all. Bitcoin, currently 6.5% just about. We did get up to 92.5 earlier on, so that would have been slightly higher, but looking very well. And down on the right-hand side, I know I don't follow that many cryptos, but most of them are high single figures or double digits. If you're holding Zcash, it's painful for you, although that did get as high as 390 today, but it has come crashing back down. Looking at Bitcoin dominance, that is on the rise, and that's what happens. Bitcoin doesn't even have to climb as high as the rest of them, but its market share is so much stronger. Looking to reattack that 60% level. And, for the altcoin bags, not necessarily what we want, but to extend the cycle, maybe actually we do need Bitcoin dominance to kind of hover around a little bit there. But it is on the climb back up. Broken, and we get rid of that. Broken sort of this downtrend, which again, don't know why it's green on the daily. It's a little bit more convincing because it's kind of broken that to the north now. And we're just sort of working our way back up. Major test around 60%, so we'll see what happens there. But total 2, on the other hand, I will give it credit. It has come careering down like Bitcoin did, and then it's had a relatively good candle today. It is below that 1.25 trillion line. That's a line that we've had on there for a very long time. And we're just sitting below that one at the moment. Bit of a battleground there. And when you think about sort of the percentage that it has fallen versus sort of how Bitcoin has recovered over the last 10 days. Bitcoin recovered 13,000, which I should have been on that chart and could have given you a percentage, but I'll do rough figures in my head, which is going to be about That's about 6, isn't it? 13 of 85. I can't work it out. My master's defeated me today. But we've only increased by about 90 billion in the altcoins. It's certainly not as big a move that Bitcoin has seen over the last couple of days. So I'm not trying to write it off. We'll have a look at ETH and a few other the sort of big players there. They are looking good today, but we've just got to get above that 1.25 trillion. We can start getting back into the conversation there. And, you know, even looking at it from a really layman's kind of view, there's an argument that there's some sort of trend line there. So I've obviously got a magnet on or something. We're running right into it at the moment. So we've got to kind of breach that. Then we can start looking about whether or not we can make some higher highs and higher lows. Anyway, that's where we are. And then BitTensor. BitTensor's been an interesting one. And for those of you that were on Discord, maybe a bit confusing for me as well, in terms of yesterday I announced I was fully out of BitTensor, and I was selling at the weekend when we lost this yellow line. I'd sold about 303, I think it was. And the idea was I'm not going to get back into, I see some strength. Well, today, actually, we did see some strength from BitTensor. Ken, I thought we might actually tip this 245 level. We didn't get that low, about 250. I was watching it. I think by the time we got to 270, I just thought, right, it's time to actually get in, ride it up. If we don't get that far, then we'll just step out again. But overall, you know, a fairly good move. We'll look at other timeframes and other indicators later on. But the one, you know, just bit for me right now is we're running into the underside of this support, which, yeah, we've always talked about. We can move it a little bit. But we are running into that right now. It's just been a major support and resistance level, so we've got to try and get through that. Now, to be fair, it's more support than resistance. The times that we have dipped below it, we have come back. But again, as I said yesterday, unfortunately, BitTensor has just continued that downtrend. I mean, we are pretty much 50% of where we were only a matter of weeks ago. And it's been such a sudden drop that I'm not really too sure, looking at it on the 3-day time frame, where we can try and think where the next higher high or higher low is going to form. I suppose we get above 320, we can start to have that conversation. But yeah, so that's where that currently sits right now. More charting to come. But actually, I'm going to throw this onto the TV, onto the monitor. Bloody hell, show my age there. Most of you should have seen this. I appreciate there are some new people, but this is the Wall Street cheat sheet. So the psychology of a market cycle. And for those of you who haven't really seen it before, the theory behind it all is that markets go up, everyone gets super excited, we have some form of blow off top, we have a correction, go into a bear market, everyone hates themselves, and then the cycle repeats. That's it in a nutshell. But why have I got this on the screen at the moment? And the reality of it is there's a little bit of a battleground here, because there's a camp. Well, I'll draw this line down here. The question is, are we here, sort of somewhere on this route up that just so happens to be a pullback, or have we topped? We're having that pull, and now this climb out is going to be a failed rally, and we end up coming back down there. And the reason this is such a battleground is I'm going to get rid of these again because I'll probably end up drawing on it. This for me is you know, you exit the market this side, tick, well done. You've chances are you've left at the, you know, one of the best possible places you can leave. Very hard to do because euphoria and greed and everything else takes over. However, you miss it and you get out this side, or I put a cross, don't know where, then you just have that anxiety of, damn it, I've missed the top. I'm going to be back in this cycle. It's about, you know, batten down the hatches, saving what's left of the portfolio, and we go again, and hopefully I'll end up learning from my lesson. And we can have a look at some sort of examples on charts a bit later on. In fact, I'll do it straight after this. But this is where the battleground is. And this in itself creates its own fear, uncertainty, and doubt. Because fear of getting it wrong, fear of being the wrong side of that line, the uncertainty, because we actually don't know until we see retrospectively, and then the doubt that just gives every trader, okay? And it's a battle that you kind of have to appease yourself. It's a psychological issue. You have to appease yourself. The only problem is, the only way to really appease it is either one, through experience, and then that's you kind of get a feeling for it, or two, you go to the best place of unvetted data there is, crypto Twitter, crypto YouTube, and just hope that your favorite person happens to tell you what you want to hear. and take that balance from there. And of course, that can give you some form of reassurance, but it actually doesn't give you potentially the answer that you need. And the answer you need is a long, hard look of where it is. And so we're going to try and, explore it, because I do think over the last couple of weeks, particularly with the downfall in the price, there's been a lot more conversation about, are we on the right-hand side of this line? And if we are on the right-hand side of this line, then we've got to really be thinking about, okay, let's not get carried away with major pumps that go up. Let's think about what that could actually mean, and then how we can potentially safely exit. Whereas if we're on the left-hand side of the line, we've still got plenty of time and we can ride any dips out. Now, we've kind of already ridden one dip out, so, it may be there. And there's no time scale necessarily on this. This could, be over in a week, or it could take a year. For us in crypto, we're 3-year bull. I don't know why I'm writing it. A 3-year bull, 1-year bear seems to be sort of the way it's gone in previous cycles. So we're going to have a look at that, and we're going to try and see where that leads us. Yep, that's what we're going to talk about. So let's try and have a look at the bad first. I think that's what I lined up. We'll find out in a minute. And what I mean by the bad is what is causing the fear that we have? What is causing some sort of uncertainty? And how are we evaluating the data that we see? Now, one of the things that I have talked about since I've been blue in the face, ignore the blue line. I was wondering what that was at the moment. It's the 200. Let's get rid of that. Is this red line here is the 50 EMA on the weekly time frame. Close below that. We don't normally do that in the bull markets. Sorry if I repeat myself. And if we do, it's short-lived and we end up climbing back through. Now, the occasions we've done it before, when we had a reset down after, can you see it? Yes, you can. Down after Easter of 2021. And then, whilst we were still in the bull market, and then also ever so slightly as we were climbing out of this bear market. Now, the closer you are to the beginning of the bull market, end of the bear market, obviously this line's going straight, so it's quite easy to dip below, but we did dip below and we were only there for a couple of weeks. Fair enough. We've tested it a couple of times, but as I've been saying, this is one of the major wake-up calls for me in terms of we close below it. And I always sort of say close below it and look for a couple of candles afterwards. We close below it, candle number one. Let's at least make this a little bit bigger so you give a chance of seeing it. And then we've had 2 further candles where and this is weekly, so we've been below it for 3 full weeks. Well, no, we've been below it for 2 full weeks, a little bit of the candle before, and then obviously a couple of days of this candle right now. And it isn't we have to get out. We absolutely, it's not that. It's more of a case of I want to start looking at bearish stuff. I want to test my resolve, my theory, my understanding of where we currently are. And I think it's probably fair to say that for the last few weeks, potentially in Discord, I've been a bit like that. And I do it, one, because I'm testing myself, but also maybe to try and just spark an interest in yourselves. It's not my intention to worry you about it, but it's just to say, look, we should be looking at it and we should be realistic. And there are plenty of different views of how we can handle the market conditions right now. And this just happens to be mine. So we are below that. So that's obviously, that is going to create fear. We're below the 50 EMA. It doesn't normally happen in bull markets. It's going to give us that uncertainty. It's going to doubt why we're still in the market. Why have I got this one open? No idea. Okay. Timing point of view. So for years, every previous cycle, we've talked about 3 years up, 1 year's down. Bull market ends plus or minus 30 days of the 1st of December. That has been the pattern that we have done every single time. So we had back in 2013, it was beginning of November. Then in 2017, it was, it was 17th of December. Then in 2021, we had again another November. And so this time we roll round. We were expecting it because we've had our 3 years up. We also had the bear market as well. So the 4 years of the Bitcoin cycle, it's coming towards the end. And we kind of assuming sometime in Q4, the top's in. And funnily enough, we actually did get a top Might not have been a blow off top, but we got a top beginning of October, early, but still in Q4. But we don't think that that's the top. But if we were just looking at the time, if we'd gone back 4 years or 3 years when the bull market started, and I drew this, I think I might actually drew it in 2021 actually, but however long ago it was, we were using these as our indication. And so again, this is sort of saying, well, this is what we've talked about in the past. It hasn't worked out this time. And I get it. The argument could be, well, there's not that big a data set, but we relied so heavily on it before, but it's not met our expectations this time. So we'll throw it to one side. Well, why do we need to throw it to one side? Let's just keep it on the back burner, because we may come back to this and be like, actually, it's worked. And if you did buy into this, and if you still do buy into this, this has got to be causing you some sort of concern, because we've got, what, 29 days left till the end of the year. And then that 1st of December, plus or minus 30 days, kind of goes out the window. Now, okay, I think we need to give a bit of a caveat around that plus or minus, but certainly that Q4 that we've seen in every other cycle is out of the window. So that can add to that sort of, I don't know, conflicting opinion in your mind right now of where the market currently sits. And then ETFs, the thing that has actually built the backbone of this bull market, the reason that everybody says this time is different. Hey there, Stuart. We've seen that in the last 3 weeks, a very tepid, well, not even tepid, actually, it's majority sells, unusual. Last week, we talked about BlackRock, $2.3 billion worth of outflows from their ETF alone, smashing any previous record. And even the buys that they've been making have been very limited. I mean, we've not broken 100 million I love that. It just rolls off the tongue these days. In the last 3 weeks. And if you actually look at the net totals, which on the far right hand side, I mean, for the last, week and a bit, week, should I say, because I know we had Thanksgiving and a bit of a close down day in and around that in America. Very limited buy activity again. And it just seems to be that actually there is a bit of a lack of interest. And an argument could certainly be made that it's not that they're necessarily not interested in Bitcoin. It's just that other assets, we'll go to this chart now, are outperforming it. So whether you're looking at the NASDAQ, and we won't go into detail on it, but, if we have a look, we've almost bought back up the collapse that we've had. And I say collapse, the pullback we've had since the end of October. Very good recovery there. S&P is looking very similar, but the two big boys here, gold and silver. I mean, gold looking incredibly strong, has been strong for months. Silver actually looking, it's outperforming gold. And so, these institutional investors are maybe just thinking, well, I've had my fill with Bitcoin for now. The volatility is not quite there, or the gains are not quite there where we can move it to other assets. They're professionals at the end of the day. And is it just a case that they're looking to move it out? And so Bitcoin's suddenly not looking as an attractive investment. And I get another argument off the back of this, which is, well, wait a second, what's going on with Bitcoin here? Because all other markets are making all-time highs or near all-time highs. And yet Bitcoin is stuttering. And the gap between Bitcoin and, where is it? I've got this chart somewhere. Yeah, here we go. So if we have a look at, so this is Bitcoin on the weekly time frame. And then if I just overlay, so this is the S&P at the moment in yellow. Hopefully that color's all right for you. But you can kind of see the S&P has just continued to fly whilst Bitcoin has sort of rolled away and rolled off. And, how we now seeing in real time, just that lack of interest from institutional investors now, which helped propel us to those highs in the first place, just dampening and waning off. And it makes a very compelling argument. And then, we'll get rid of this and we throw in the likes of gold, which again, I take gold with a pinch of salt, because, gold BTC over the last year, okay, gold's been smashing it over the last 3 or 4 months, but over its entire lifespan, and obviously Bitcoin has far outdone what gold has achieved. That being said, institutions have only been involved for the last 2 years. And funnily enough, now that gold has been on that run since the beginning of 2024, maybe they're starting to see, well, actually, there's a route to take from there. And it's just the fact that it's the visual image, isn't it, of, both this for the S&P and gold in green, and then Bitcoin just doing that. And again, just creating that uncertainty whether or not we're in the right asset at the moment. And then we've got the likes of MicroStrategy, which Bijan goes on about it all the time, and he's right to. MicroStrategy and MSTR have been struggling for the last, I don't know, let me get the chart up. I mean, they made an all-time high in November 2024, and in this year's high was July of 25. And since then, you know, we are down from 450. I mean, its low was what, 150? So an almost what, 60% drop? That can't be right. Yeah. That's why I was a nav and Sam was a pilot. Do the maths. Yeah, almost 60% drop in value over the last 6 months. And if this is, you know, the benchmark, if you will, of sort of strategic Bitcoin reserves and sort of like the, you know, the first experience and of a company, not S&P, I don't think they got on that yet, NASDAQ, whatever it is, listed company, you know, not just dipping their toe into Bitcoin, 650,000 Bitcoin. And again, investors don't seem too interested. There's a whole reason as to why, but ultimately you look at sort of previous cycles when MSTR or MicroStrategy was back then, stock price starts to roll over, it kind of indicates that actually the cycle may well be over. And yep, you guessed it, MicroStrategy's price usually rolls over before the peak of the market. So, I mean, again, 2021, its high there was 130. We rolled into that dip and then we got up to, okay, November's about the same time. I'm going to talk about those two cycles in a moment though. Not this one, but the latest FUD is the CEO. Remember, Saylor is no longer the CEO and the chairman anymore. He's just the mouthpiece for it. But Fong Li or Li Fong, I don't know. Apologies if I butchered that name. You know, he's now on record saying, look, if the MNAV goes below 1, then we actually could consider selling. I actually wrote what all this was down, so I didn't get it wrong. So MNAV is basically the market cap of Strategy divided by the market value of their entire Bitcoin holdings, and that kind of gives you a figure called the MNAV. It currently sits, I should have had this up. There's a picture of it down here. It currently sits, it says it's 1.6. It actually sits at 1.14 today. Sorry, 1.16 it says on the picture. 1.14 is where it currently sits. And so it is dropping and it has continued to drop. And the point is, if that gets below 1, then they've said that actually they may well be open to selling Bitcoin, which, okay, they've got a lot of Bitcoin to sell. I don't think they're going to just open the floodgates, don't get me wrong there, but it would be the perception, I think, which would have a negative effect on the market. But, you know, at the moment, it is still above 1. And as long as the MNAV is above 1, as my note here says, the stock trades at a premium to Bitcoin's value, okay? So people pay extra for Strategy beyond just its BTC, okay? So there's some value there. There's the other story, which we covered last week, about whether or not they may get delisted by the MSCI. That decision is going to be January. We'll have to wait for that one because of sort of the digital asset treasury and how they're being seen at the moment. Obviously, that isn't helping MicroStrategy's price or Strategy's price as a whole. But again, could that just be being fed? And then sticking with Strategy, interestingly, most of you are aware of the infinite money glitch they do, where they just basically make more shares, sell more shares, and then get it to buy Bitcoin. And they've done that for ages. But interestingly, what they've done this time is from their recent share sales, instead of using those funds to buy Bitcoin, they've actually put 1.4 billion cash in their back pocket as a reserve, rather than, well, they did actually buy a little bit of Bitcoin. I won't say they didn't buy any, but so that they can support dividend payouts over the next few years, effectively giving themselves a runway. Now, you could see that as a positive, or you could see it as, well, wait a second, do they know something we don't? Bitcoin's price, they're not confident in it either, and they still got to pay shareholders, so they're going to create some wealth or some funding elsewhere, so they make sure that that's covered to try and appease shareholders at a later date, because we may have a tumultuous, that's not the right word I'm looking for, but they may have a difficult time ahead of us for a few months. Possibly. I mean, it just another news story potentially is there to just sort of create that level of uncertainty. Cycle, price action, current price action. I mean, this has got to be the final thing that is worrying people. And I'm not talking about today's price action. Well done today, $5,000 on the day, happy with it. But just generally over the last 6 weeks, Bitcoin's price action has not been one that would say to you, we're in a bull market. It certainly doesn't convince me that we're in a bull market. What was it? 36% we dropped from top to bottom. Yep, 36% from top to bottom. Okay, we've recovered some of that now, and fair enough. And it's no longer 36%. We currently find ourselves at 27. We're still 27% down. What is the rule of thumb? A drop of 20% or more is technically a bear market. And I said this at the cuddle. We are technically then in a bear market, aren't we? There's no other way of looking at it. How long this bear market lasts, we'll have to wait and see. And you could argue that in this longer bull market, we've had a couple of times that we've ranged and ended up being in a bear market. But sentiment is down for a reason, because we have lost. People have lost. Even if you just held Bitcoin, $40,000, well now $35,000 worth per every Bitcoin that you own has gone, has eviscerated, evaporated, disappeared in the space of the last 6 weeks. That certainly doesn't feel like we are in the bull market, particularly if you're looking at your Delta portfolio. Then we go into altcoins, and it's an even more disturbing picture. So, of course, there's plenty of fear going around. Why did I leave those there? I don't know. We'll get rid of those. I'm going to have a quick drink because I'm thirsty. And okay, I've not lost you. That's good. Right. So yes, there's plenty of fear to be going around. And I could have picked, trust me, 20 more minutes worth of different things over the last couple of weeks. But you kind of get the point, and I fully understand it as well. However, what have I been saying? What do we always say? When there's blood in the streets, buy, buy, buy. And never a truer statement is that. Crypto sentiment yesterday finally moved out of an 18-day stretch of extreme fear, a time when we're supposed to be in a bull market, potentially near a blow off top. And we had 18 days, a stretch we had never had that long before in extreme fear. Certainly not in a bull market. I'd have to double check in a bear market, which we'll have a look, I suppose, in a moment. But, we had 18 days worth of opportunity to then potentially add to our bags. And we can't be in a down only. And this is where we get more into sort of sentiment. Again, I've talked about this for weeks, I suppose, of even if you aren't necessarily feeling bearish, getting out right when it's extreme fear is always the wrong move. It's rarely the right move. Granted, actually, 18 days ago, we were probably at a much higher price. But just giving up down there, where you might as well at least wait for some sort of bounce, whether it be in sentiment and or price, before you then make that decision. And the fact that we have been in fear for such a long period of time, sellers are exhausted. There needs to be some relief. Maybe today was that relief. But here we are, 23 at the moment. Yesterday we were 24. Over the weekend we got to about 26 and 28, I think. But last week we were down at 20. But if we scroll down, so this is the line. I've drawn this on, so it's roughly around about 25 where extreme fear is. And you can kind of see basically from the 11th of November to the 28th. Oh, it's actually incorrect then with my dodgy lines, only 17 days. We have been below that. I mean, we zoom out a year. We can. No, we can't because that's on. Let's get rid of this. Again, the only time we've seen anything similar to this was a dip down and then bought back up. So we're about 3 days in the end of February. And if we have to go to the max, it's really hard to judge it here. I'd say COVID was probably a similar amount of time. And then, bear markets. And I suppose probably this fall off from the April high in 2021, which we're going to discuss in a moment. But yeah, prolonged periods of fear, usually a good time to start, dollar cost averaging back into it. I don't know why I've got this one on here. What is this talking about? Sorry, I honestly I don't remember adding this. Bitcoin's valuation metric projects a 96% chance of BTC price recovery in 2026. Similar. I don't know. Maybe I was just trying to make the point that we're starting to see positive news coming out more regularly as we're in this peak fears. We try and look to climb out of it. I'm not necessarily too sure there. But what I would say is, and it kind of goes back to maybe what I was showing on, was it this chart? What chart was it? Sorry. Where was the chart I had, which had, doesn't matter, where I had the other prices on? I can't find it. I'm going to do one little quick flip through. Nope, can't find it. Don't matter. I'll find it another time, not when I need it. Here we go. So this one here. Okay, fine. It's the one next to it. But I mentioned earlier on with the likes of NASDAQ, with gold, and I know they may contradict each other with risk on and risk off assets, but generally, risk on assets, we're still seeing actually a very explosive time for the likes of the NASDAQ. And I'm not here to pick it apart and be like, that's because of NVIDIA or the big seven or whatever. Just in general, the NASDAQ as a whole is on the way up. Okay. And it's continued to climb up with pullbacks, but it's continued to keep on going up. And there's not really too much fear in and around that at the moment. There was some extreme fear last week with this pullback, but we've now seen over the last sort of 5-6 days that has started to disappear away as this starts to climb through. And we haven't quite got to a new all-time high, but we are not far off it again. And this just continues to climb. Whether you want to talk about AI bubbles and money glitches and all that, fair enough. I'm just looking just generally, risk on seems to be performing very well. And I know that I said here that Bitcoin looks to be the opposite way, but there is something to say that if you are someone that buys into correlations and risk on assets generally move together, then there's an argument to be had actually that, yeah, okay, Bitcoin has moved away, but actually what that is building us up for, because it's a bit more volatile, is like a really tight rubber band. We can snap back, and we may well snap back pretty darn quick to catch up with where these are going as money starts to filter back in. If institutions decide that actually after that much fear, we are at a point in which they've seen a price of Bitcoin that they're happy. And I didn't actually look at what Bitcoin's fair value it was, but I do remember a few months ago talking about it being around about 75,000. So it's probably going to be there or thereabouts with where we've seen price drop down to. So there's certainly an argument to be had that actually the rest of the risk on assets have not had that blow off top. They've not had that explosion yet. And so if we are to just treat all under one umbrella, then we've still got time for Bitcoin to continue to climb. And then, Simon's talked about this a couple of times today and yesterday, and we've mentioned it before, that today or yesterday, quantitative tightening ended. Okay? What? So that ceased to happen, and the Fed put 3.5 billion into US banks through sort of overnight repos and how they go about doing that. One of the largest liquidity injections since 2020, as it goes on here, outstripping levels seen at the, prior to the dot-com bubble peaks. I'm not necessarily too fussed about that because the size of the financial system from 25 years ago is a lot bigger. This one doesn't expand out. I had another chart which had sort of basically it was the entire screen, and it really just put into effect just how big a sort of not just the peak up, but how flat we have been during this quantitative tightening period. So, we're certainly moving along. Okay, we've started to see interest rates come down, and we'll talk about interest rates in a moment. The Fed have confirmed and actioned the end of quantitative tightening. And again, I don't have it on the screen, but I did somewhere have, might have been in Telegram actually. Let's just have a look. Sorry. Yes, here it is. Okay. So this is the minutes from the FOMC or the statement from the FOMC And what's highlighted in yellow here, the committee decided to conclude the reduction of the aggregated security holdings on the 1st of December. Effectively, that was them saying, yep, we're not just, this isn't a one-off emergency payment here. We've made that decision with all of the economic factors that we've seen that we're going to end quantitative tightening. So that is there. This was the chart where it's looking a hell of a lot flat at first. You can just sort of see that period of just no assistance whatsoever, and then suddenly it started to come in. Anyway, so we've got that in our back corner. That generally, with a time lag, is a positive thing. We are one step closer to quantitative easing, and then we know what happens with that. But you also know my views on the timescales it takes to get there. And then maybe, you know, again, we can pull up plenty of other sentiment charts, and one we've ended up talking about was the death cross, because everyone loves to talk about the death cross. And they only ever talk about the death cross when it's about to happen, and then we easily forget about it. But as we identified, death crosses typically, I'm not going to go through the 12 occasions again, go back to last week if you want to have a look, but death crosses usually come not at the start of the drops, but towards the end of the drop. So the death cross here occurred on the 16th of November, and the low at the moment, the local low, occurred 5 days later. So seems to kind of make sense that, yeah, maybe we have marked the bottom. And in fact, looking at this chart here, you can kind of say we've made a higher low. Sorry, getting the wrong way around. With this, I mean, you know, spoiler alert for what we may also talk about, looking like a potentially fairly decent double bottom there as well. But we've certainly made that, and that sentiment around death crosses kind of suggesting that actually we may have seen the end of the falling. And then we have a look at some of the other ones. Now, I don't always put these on. We used to talk about the RSI, which is the first one. I don't know why the labels aren't on here. The stochastic RSI is the second one, and the MACD down at the bottom. We're on the weekly time frame at the moment. If I just drop it down onto the daily, you can kind of see again where the death cross occurred, where we get into massively oversold levels. You know, I can't say it, stochastic RSI, spit your words out, Harry. Again, pretty much at rock bottom. And then we get to Friday the 21st. What do we see? We see the RSI climbing out, bursting out almost over a couple of days. The stochastic RSI got it right then with that vital crossover of the yellow, the orange and the blue, the 8 and the 26, I think it is, or 13 and 26, 8 and the 26, I'm certain now. And then getting back in, I mean, granted, it's flown up on the daily, but on the RSI, still got plenty of room to run now. We've made that bottom. And the point is, we don't normally get down into this level. You know, we kind of got there, but not as low as what we ended up getting after the crash. But we don't normally get down this low, particularly with where the RSI and the stochastic match. And then when you add in the MACD, you really get a sense of actually how low the sentiment was across the market, the speed at which these moves have been happening, and then just sort of how we can start to look and build that recovery there. So buying in with that prolonged period of being in the prolonged period of being in extreme fear, tying in with some sentiment indicators, if nothing else. I mean, people do use them for TA as well, fair enough to you. But that's looking to me like actually maybe we have found a, for now, local bottom. And, you know, time will tell whether or not that looks to move any higher. Have I missed any of the other ones off? Oh, yes. Let's clear all this. I don't know if this sits in the middle, but oops. The one thing that people like to, you know, talk about, me included, I wish I'd stopped doing that, is 2021. 2021 was a bit of an anomaly because we had this huge run up Bitcoin's price. We made a local top 64,000, had that god awful crash come down, China banning mining and all sorts of, you know, Elon selling all of his Tesla Bitcoin, all compounded into just this crash. And then we had this relief rally, which actually took us to a new all-time high before the bear market down. Okay, you know, rehashing history for those that weren't necessarily there. I kind of said that a lot of sentiment, a lot of market indicators, everything else, actually always said that this was the top. And then everything afterwards was, if you go back to this chart here, was the complacency side of things, but actually this dead cat bounce just happened to go a little bit higher because of the likes of Sam Bankman-Fried and Duke Wan and everyone else just pushing that greed of the market a little bit up, and then we ended up having that here. And that fed my narrative. It also works with the 4-year cycle being in November, not actually in April. So I get it there. But there's actually quite a lot to be said with where we find ourselves now, and a parallel between, well, actually, is what we're experiencing here just what we experienced here? And we are going to find some sort of bottom, and it can take months, unfortunately. But when we've really drained sentiment out there will be something that rises us out, and we actually sort of race and break away to a new high there. And I can't rule that out. I try not to get too attached into that decision making, and more just look at it from a point of view of, let's just try and read where the charts currently are. But I think that's certainly something that you can consider and have a look at. And again, if you're needing something to give you a little bit of hug at night, we have had a very similar thing happen before over a different time frame, because we should have expected this to be the peak if we're sticking with the Bitcoin 4-year cycle. But there's still that move to be had. And I deliberately avoided it, talked about the Santa rally. Seasonality with October, seasonality with November, and the sort of the run into the Santa rally, and then, hey, the Santa rally itself. And there's a damn good reason why I've not bothered talking about seasonality today in the Santa rally, because we've been waiting on that for the last 2 months, and it has smacked us in the face both times. So let's just leave the Santa rally to do its thing, and we'll worry about saying we were right about that in January, shall we? And we'll go from there. But there is one other thing to talk about, and that is interest rates. And this has been wild. Interest rates. Now, it's not been helped. As a lot of you know, the FOMC, or the Federal Reserve, they meet 8 times a year. But what they do is they use economic data to try and determine where they think that the US economy is, and then off the balance of that, trying to sort of work out how best to manage interest rates versus inflation. Okay. And we had the US shutdown for a considerable amount of time, record number of days, can't remember off the top of my head, 7 weeks, I think it was. And so a lot of that data was lost. And I mean, actually lost. We're never going to see some CPI and jobs data. And so over the last month, this chart here, the probability of a rate drop, and the left-hand side is a 25 basis point rate cut, has moved around. And I did save a picture. I can't be bothered digging into it. But at one stage, it was a 60% no. We weren't going to have it. But as more and more data has started to come out, you can kind of see that next week, so Wednesday next week, there's now a 90% chance that we are going to get that rate cut. And we all know that's great, because interest rates coming down, that's going to help, retailers and mortgages and all that kind of stuff, but it's also going to help US in terms of their debt, refinancing that, and institutions loaning money. Typically then they borrow against that, put it into the stock market, and helps risk on assets go up. It is generally considered a positive thing. And the last couple of times we've seen rate cuts occur, we've had a positive impact on the markets. We've had a positive impact on the main markets, a short-term positive impact on Bitcoin, but we have seen that there. And were that be the only global interest rate adjustment potentially happening this month, we could leave it at that. But unfortunately, and some of us have started talking about this in Discord, Japan, their God, I can't remember his name now, Ueda, I think it is. They're effectively version of Jerome Powell. He spoke in the early hours of Monday morning and gave his, highest indication yet this year, whatever, that they are now looking to raise interest rates to tackle the bond yields, which are, pretty much stuck at 1.86%. We'll have a look in a moment in the charts. And this has led people to start talking about, well, what actually happens when the interest rates are raised in Japan, which are historically either zero, below zero, or incredibly low. And I'm not going to bother going through it. I actually wrote about it in a little bit of detail in Discord. The carry trade, and then what is commonly referred to as the unwinding of the carry trade whenever interest rates are raised in Japan. Now, we don't talk about it that often on the channel, but someone that I watch every day, Traders Reality, Tino, he goes on about this all the time. He's been banging on about the likelihood of Japanese interest rates being raised. So the reason I put it on the screen is if you want to have a detailed understanding, just go onto this guy's YouTube channel if you're not already subscribed, following him. And just the last 3 videos in his lives are all about it. This first one, which has the Japanese flag in the background, the Bitcoin symbol, probably the best one to watch. But then, so that was on Friday. This was yesterday after the crash. And then this one was today's. But he talks about it, plenty of videos down there, and he goes into it in a lot of detail. And the reality of it is that carry trade unwinds effectively impact traditional markets and, well, just all risk on assets. Interest rates suddenly get higher. So it's the reverse of what we were just talking about with the United States. Suddenly then, people that have taken out loans in the yen, the interest repayments are higher. So they have to sell positions to pay back those interest rates or get out of them. And then there's also less interest in people utilizing the yen as an opportunity to sort of borrow free money to then put into risk on assets globally. And that causes crashes. And the most famous one in our last couple of years, I suppose, is what happened. Let me just make, I've got the wrong chart open. Where is it? Here we go. Thank you. Right, found it. Is what happened in July and August of 2024. If I can find it. Here we go. So this is Bitcoin's price. And what we can see is with month of July, I've not got my pen on, month of July, month of August, okay? So that's what we're looking at. So everyone associates the carry trade unwind on Monday, the 5th of August, 2024. That is the final day of the unwind. But what actually happened is the end of July. So I think it was the 20, it was either the 29th. I think it was the 29th. Just Japan might have been the 30th. Interest rates were increased, okay? And they went from 0% to 0.25. And then what would we see? We saw a massive sell-off, not just in Bitcoin and cryptocurrencies, but in all other markets as well. I've not set this up for this one, but I'll just use this as an example. No, I won't, because that's been drawn on. And you can kind of see 2024, where am I? May, June, July, August. Oh, I was on the right spot. So this huge fall, the NASDAQ showed it exactly. Aggressively bought back up, but a real sting in the markets across the board. And that's the worry that people kind of have now, is that, well, if we do see an interest rate rise, will we see that shock reaction happen again? And if Bitcoin hasn't recovered from its already fall, are we going to see further falling happening? As I said, Governor Ueda gave his clearest indication that they are going to raise the interest rates. They basically have to. If we have a look at, not that one, was it this one? Yes. If we have a look at, sort of have a look at the US dollar versus Japanese yen. So we are on the weekly time frame here. I mean, we're at 155. Look at sort of previous other times, back when we were in July, we were sort of at 160. And then sort of beginning of January 2025, we were at 158. Does anyone want to have a guess at what happened in and around the inauguration of Donald Trump this year? Japan increased their interest rates. That's what happened. So yes, we had, so I've lost all my pages now. Here we go. Yes, we had all those levels of excitement in and around Donald Trump winning his election and then getting in. And everyone's like, oh, it was a buy the rumor, sell the news type of event, because the day he was inaugurated, Bitcoin's price plummeted down. Let's just get rid of all of that. It's just too hard to see. What am I on a weekly time frame here? And if we go back to, he came in, what, the 20th, wasn't it? It was sort of like here, Bitcoin's price. I'll put it on the daily. Oh, well, I'm going to go back to that chart I was actually on, because that had all the stuff I needed. Right, here we go. Sorry, jumping around, too many charts. So here we are. So that's the August one that you just saw disappear off. And then we had this one here. Trump gets inaugurated. And suddenly the price falls off. And remember, everyone said, price fell away because of the tariffs. He didn't mention tariffs for a few more weeks. He didn't mention tariffs till March. Then price fell off. But if we throw this bad boy on, okay, so this yellow line that you probably can't see very well because my head's in the way, here is the Japanese interest rates, okay? And just look, on the 24th of January, they raised it. They raised it from 0.25 to 0.5. And look what happened. Not just to Bitcoin, but across the market. Yes, tariffs didn't help, and that probably exacerbated how long the fall lasted for. But actually, it was another carry trade unwind. So these things have real power, real impetus to them, I suppose. Similarly, there was another one. Sorry, again, I should have zoomed out a little bit. What was the other one? Was it here? Oh, it was. Beginning of 2024. So Bitcoin's price at 73,000. When we got that high point, 70,000, we ended up ranging for ages. What happened? Well, they raised their interest rates from a negative interest rate to 0.1, or effectively zero, which caused, again, the markets to sell off. So I think that's just something we've got to bear in mind. We've got to sort of at least acknowledge that is very likely to happen. The decision we made on the 18th and 19th of December, so right before Christmas, we could see that driving the price down. So just bear that one in mind as we're going in. And I think that's something that, it's something that we should be aware of. It doesn't mean bear market, it's over. It means that we are likely, if that happens, to see a crash as people start to, sell stock to repay their loans, but also maybe not have the desire to put it back in. But as we've seen every other time, it does get bought back up. So, just got to ride with it, but expect it to happen. And again, as we are leading up to the 18th and 19th, and if you're thinking about, this is likely it's going to happen, maybe it's an opportunity there to take advantage of a fairly repetitive action once that happens. And nothing's 100% guaranteed, obviously, but potentially an opportunity there. I'm just having a look. Price haven't dropped too badly. Zcash is falling, TAL's falling a little bit. Okay, right. So we actually have a look at some charts. I don't think anyone's asked any questions. Look at charts, quickly chat about detail, then we'll do the big charts. Okay, Bitcoin, 12-hour time frame. Last week, found that bottom, crashing through. Bottom was where the liquidation heat spots were. Been there for 6 months. We took those out and we went no further. Now, data is kind of limited at the moment, but there isn't really too much. The next major liquidation point that is actually being built up at the moment is that 93 to 95 level, which interestingly enough is where we got held off a couple of days ago, and it's where we've run into a bit of resistance again here. So we sort of just need to be cautious that, yes, obviously we want to eat through this, but it's not just in my mind beating 93. 93 is a level for other reasons as well. But between 93 and 95, we could see them just turning that back around. So just be cautious when you're in there. 93 isn't the time to just get euphoric. Wait to see if we get through 95. And then, if we just get rid of all of these for a second, got to remember not to save that chart now. Realistically, we want to be getting through 96 so we can take out this shoulder here and we can start talking about creating a higher high from this and changing that, ultimately, that downtrend that we have been going through. Looking at it in sort of another point of view, and we will get into the vector charts. I've already shown you 50 EMA and everything else. I think for me, the main thing that as nice as this move up has been, and as crude as some people might look at that line to be drawn, I just think until we break through that there's no evidence to me that the downtrend is over. And yes, I do like how there is a bottoming pattern that has formed down there. And it's great to see that we have had an engulfing candle today to take out everything that we lost yesterday. Perfect. They're the sign of strengths that you'd like to see. But until we break this line, it doesn't really mean enough to me right now, because all I can see is what's happened over the last 4 or 5 weeks beforehand. And yes, $13,000 over 10 weeks. Sorry, 10 days. Fantastic. That's what we need to see. We just need to see that 2 or 3 more times. And then we can be excited about what's happened there. Oh, I've just flipped my live stream. Sorry. Okay. Not sure if that's gone and buggered everything up there. Sorry. I pressed something on the wrong screen. I mean, we can start to then add. No, we can't. Don't need a funny line. We started in just build a picture of just support and resistance without seeing any of the vectors and everything else, just sort of like getting in our way. But I'm drawing this here because it's kind of the base of the shoulder there, but I'm actually, which is just above my head, but I'm actually more interested in this double bottom, if you will, the neckline at the moment. And we've kind of come running into that. 4 hours to go today, 91,000, fine. I don't care if we break it tomorrow, but we've got to break above that 91. We got to stay above the 91 with a daily close. That's what we need to do. So little steps in front of ourselves to sort of build it through. We throw on the EMA. It's going to be, I'm going to have to change to weekly, but if we just put that as a double line, I just want to see where the 50 weekly EMA is. We can sort of add that level on. So the daily 50 EMA is 99, basically. It's here. We go on to the weekly. It's almost the same. It's just ever so slightly higher. But 99.5. So, you know, from the daily and the weekly's point of view, 50 EMA, they are pretty much on the same level. Whether you want to call it 98, 99, 100, I'm not too fussed. That level there is such an important level for us to get through, and also psychologically. But we can see just with this, there are some big levels that we need to work through. Yes, I'm happy with the pattern that's formed down there, engulfing candle as well. But let's just take that momentum. If it's not done today, I'll still take it. The fact that we've had that engulfing candle, I'm happy with it. But we need to do it in the next couple of days after that. What we don't want to see is to start to significantly lose our gains from today. Otherwise, we're just going to be questioning whether or not we've actually just been rejected from that waistline there. Okay, let's have a look at it. With what we can see here, a few more lines on this one, EMAs and support and resistance lines, again, tying in. Now, interestingly, that 50 EMA that I talked about at 99,000, it's actually tying in with the June low down here. And it was the unrecovered vector here. Obviously, we've lost it here. But can you actually see now, zoom in terms of giving us a path and a route to it? Yes, today, this is likely going to become a vector candle, okay? I accept that. But at the moment, it's not there. So what have we got? We've got these vectors here in our way. So there is at least some form of magnetism that can take us into that zone. We can see vector candle left here at 93 to 94, which is a little bit similar to the liquidation zone I talked about. But in terms of actually trying to draw us up through there, it's kind of, you know, coalescing. Now, we can have the same amount of gain as today. Yes, tomorrow, sorry, as we did today. We may actually get the green line, the white line, and the 50 EMA all converging into one spot and hitting it there. Big ask, unfortunately. But, you know, the next couple of days, this is going to keep dropping down. So let's just give ourselves a week, shall we? And just say, right, 96.5. This time next week, we want to have seen that we've got to 96.5, ideally, get through there. In terms of everything else, obviously blue vector candle today, so we haven't seen a little bit of increased volume there, daily time frame, but we've just come crashing into that 20 EMA, and it does worry me a little bit. Like, as much as I want to try and take that bullish sentiment, just look at sort of the history, you know? The 10 and the 20 have just bullied us all the way back down, and the 20 being the big brother, you know, you finally slip through or give the little brother a right hook. The big brother comes and gives you a knuckle sandwich. I don't know why I'm talking about fighting here. And there we are, you know. So again, this is a little disappointing. And the fact that, yeah, okay, we got hit at, we rejected at 93, which just so happened to be the 20 EMA on the daily time frame again. And now we've been rejected at 92, which, okay, it's been a couple of days, so it's continuing to fall. It's the 20 EMA. So yeah, that being said, it's a vector candle. We've got some momentum there. So maybe tomorrow we get through it. We actually manage to stay above and through that one there. What we can also have a look at, I suppose, is a fib, because there's an argument to be had that this is the base. And 92.7, we got to not 92.3, 92.4 on one of the charts I was in, kind of running into that fib level. Maybe it's starting to make a bit of sense why we have had a slight rejection from this at the moment. But we can build from that, and we can sort of look to work our way through. And then just to add confluence to it, you know, the 382, one of the three goldens in at that 98 level. I mean, there's a lot between that 98 and 100 level, isn't there, to get through? So when we get there, we're going to need volume. We're definitely going to need volume to burst through that. Right. Let's drop onto, let's get rid of those first, because that's just going to be messy as anything. We'll get rid of that. We'll get rid of this. We'll have a look at how things panned out in the 4 hour. I don't think we'll take it any lower necessarily. So, okay, here we go. W formation, as we can see, still looking good on that there. Not only that, burst through the 50 EMA with a green vector candle, blue vector candle as well, and we are starting to see that pull back ever so slightly at the moment. But right now, the strength is still there with us. Now, let's not get carried away, because it was only this time last week we broke through the 50 EMA with a green vector candle and we stalled. We couldn't quite get that momentum going. And what we don't want to see is that same pattern there. We need to see ourselves building from it. And then we've got the 200 EMA, 95, top of that vector zone there to come through. The other thing that we talked about in Discord today was just this vector candle recovery. This red vector candle, strong big vector candle, is completely recovered. And with the exception of today's candles, everything in this 2 week range, all those vector candles have all been recovered. Whatever color they were, they have now been recovered. We don't break through and clear this range, then we don't break through for the next couple of days at 96,000. I hate to say it, but there's a very good chance that we are, unfortunately, going to come back and recover those vector candles. I hear the words come out of my mouth when I say it. It does feel like I'm very much on both sides of the argument, but that's all we can really do, is just play both sides of what we see. Use whichever metrics you want. Not to give you the answer you want to see, but just to interpret where the price currently is. And for me, that's what I'm seeing. You know, we can't get through that 96 level, then we will have failed there. And the next logical thing is to do what we've done whenever we're in any range, is just recover those vectors. So that's what I'd be looking at. And maybe we get away with just recovering this one. Okay. But, you know, history has shown us that we like to recover vectors. Okay, let's go on to BitTensor. A bit more detail of where we are. Let's get rid of that if I can. All right. So we had that daily time frame. We've had that fall down, very similar to Bitcoin. The fall has been faster and harder, unfortunately, but that's because we had a great, nice rise through it. You know, at the end of the day, we're exactly where we were in September, end of September. We've just had a bit of a triangle, bit of a pyramid. We've gone on one side and we've just finished our journey all the way back down the other. We didn't quite get down to 246, which remember wasn't the bottom. Some charts went as low as 165 on that day. But anyway, we've come down there. But interestingly, and again, just in case people couldn't make it today, I kind of posted this in Discord. The battleground for BitTensor, daily time frame, 4 hour time frame, 1 hour time frame, 15-minute time frame, was 290, and we haven't got through that yet. And unlike with Bitcoin, where the little brother needed the big brother's help, the little brother's pretty strong here, and he's been beating us up all the way through this. 10 EMA has just been knocking us down, and that's kind of where we got to today. Maybe we get another run at that tomorrow. Maybe we even ever so slightly wick through, but we have got to get through this 10 EMA, and we just haven't done it in 30 days, really. And the last time we were above the 10 EMA was the 3rd of November. So yeah, pretty much 30 days since we've done it. Since then, we've come down. Now, the only good thing is we've not really created any vectors on the daily time frame. So we're just general volume. And I'm not getting into the fundamentals of, I know the halving's coming up and all that kind of stuff. I don't play that game. So that will be what that will be. But right now, it's not quite there. I did like the strength today, you know, and we'll drop it down to lower time frames to get back in. But, you know, we're starting to lose that a little bit now with where we are. We'll just have to see how that one ultimately plays out. But again, you know, there's a W formation here, but it's not the one that I like. It's not quite like Bitcoin's, is it? Because you've got the left one there and the right one's ever so slightly lower. Maybe suggesting that actually the downtrend is still on. We haven't made that higher low as of yet, and we haven't made a higher high either. So even in this downtrend, which we'll look on the lower time frame, it is consistent of just lower lows and lower highs. And you know, that has been a pattern for BitTensor for the last 12 months, unfortunately, except for 3 weeks in October. But yeah, lower time frame, zoom in as well. I'll just clear that, and that. Suddenly the 10 becomes the 50, and you kind of get an understanding as to the strength of why that 10 so looking so good right now. But so this is what I saw today, was this green vector candle, again recovering that vector candle there, which we talked about, which it has fully recovered now. And as I said with the Bitcoin, now that candle's fully recovered, it's anyone's game as to what can happen. We fully recovered it into the 50 EMA. We've seen that rejection. We've left the vector candle behind us. But if we can just keep and hold these 10 and 20 EMAs here and build from this, it's fine. That vector was not, unlike Bitcoin, was not through the 50 EMA. So we've failed to get that strength there. And that's kind of the difference with, you know, how the price looks. You know, you don't have that extra impetus to get through difficult EMAs like that. You just end up turning yourself around. So bit of work, unfortunately, to do with BitTensor there. Still in that downtrend. And kind of when you look at this, I don't know if I can do a side by side. Let's see if I can quickly. We can. Oh, Jesus, what's happened here? Try and get these to look semi-similar. Look at that, kind of, you can kind of see it. Yeah, at first glance it looks the same, but actually when you start to look in a little bit closer, you can kind of see the difference there, and perhaps why not as excited with sort of Bitcoin and altcoins in general for me. It's failed to have that similar move that green vector candle through it, blue to continue, green vector candle didn't get through it, rejected, it's turned back down. And again, the difference in the two highs. It's those kind of subtleties that just give you that, I know, extra edge, in my opinion, as to, is that one really as strong as the other? Not right now. It's not showing me the need to get through. Now, we know from October that Bitcoin can totally outperform BitTensor if it wants to, but that has been few and far between right now. So that's where we currently find ourselves. Zcash, let's get rid of this. I don't think anyone's in it. Some of us have just been trading it. I mean, I did laugh. I don't know if any of you watched that voice or listened to that voice note from Simon. He's like, that's why Harry and I don't derivative trade. And I'm like, yeah, I've been doing that a little bit recently. It is a fine art. I do it on some really low time frames, so it can certainly cost you out. Zcash has just not wanted. I mean, it obviously after that monumental run up, it is just failure after failure. And I think just for me, 275 just seems like a sure gone conclusion. So I had a bit of fun shorting it, did a little long, and then it's gone short again. It's just, yeah, even after all of the excitement from today, it's just Zcash sellers are just totally moving the market down. Let's have a look at Ethereum. So Ethereum, okay, I'll say this looks similar to Bitcoin, actually. We've got that W formation for our time frame. I won't bother with the daily, but we've got the W, right-hand side's higher. We've recovered that vector. We've broken through with the 50 EMA. We have got room to run. Okay, we can just get some sort of momentum, take it to that 320. It's going to take us to the top of this shelf here, and then suddenly we've got an opportunity to have a look. Now, there's a few things in our way. I mean, there's vectors to guide us and to give us some magnetism, I accept. But that 3353, I'm not sure why I drew it, but it must have been some support and resistance from previous. It was from all the way back into August. And then the 800 EMA on the 4 hours, well, 3,600. But at least we're starting to see that this is mirroring what Bitcoin is doing. actually very similar in the sense that we've trend line, we've got that sort of waistline. It's kind of rejected from it, but it's close enough to say that we're still having the discussion about whether or not it is into this waistline here. So certainly something to look at there. Solana, let's just do some of these on the daily. I'll tell you what, we'll go up. S&P, okay. It has broken through the 10 and the 20, fair enough. Still not got through the 50 yet, but it has actually moved quite well. Needs to break through that 50. BNB, it's what I thought we were going to see. 10 and the 20 holding us back. Ethereum, 10 and the 20 holding us back. Link, 10 and the 20 holding us back. Near, just a 10. Solana, it's a 10 and the 20 holding us back. We are seeing a vector candle here. Can we get through it with that vector candle? We'll have to wait and see. An XRP, it's the same story, just different crypto, you know? We're still in a downtrend. And I think that's really is my concern, I suppose, you know, if I was to try and balance out what we've talked about for the last hour and 10 minutes is, had today not have happened, I would have been relatively bearish short term, because that's what the charts are showing me to be. Today at least gave us a little bit of excitement. But we haven't really seen any major break of market structure. And until that happens, we should be on guard. That's all I'm saying. We should be on guard. And that's what I'll be. And it is not me trying to confuse you all with a different narrative. It's just that I happen to do things differently. And that kind of gets me onto, I think, the detail question that I missed. Apologies. Someone asked, basically, I saw a lot of things talking about detail, and then someone sent me a message about detail. This wasn't the message. It was just me. They asked not to be named, so I just sort of wrote it here. It says, what am I doing wrong with detail? Underwater despite following the moves, and with towel bleeding, I'm down. Okay. I think the point I'm trying to make with how I sort of view the markets right now, and also with how I try and help people when they ask me for my thoughts on detail. You're following someone. So Simon is in the Tau system. Simon is basically institution, right? He is a whale, him and DSV and everything else, right? And they are viewing that market completely different to how you are viewing the market. They're not worried about what the price is going to be tomorrow. They're not worried about where the market is going to be in 4 months' time. They have a much longer horizon, and also a much longer runway, so they can tolerate the swings and the roundabouts far better than those those that have reached out to me, and and those that are willing to open up. Generally, they're people that are, a couple of hundred towels worth, maybe less, that's in the detail system. They have time frames that they are looking to engineer profit by to be able to utilize crypto to pay for real world things, which is, that's what most of us are aiming to try and do. The point I'm trying to make is that with the likes of detail, and in many respects altcoins as well, you either accept the volatility and the risk that comes with that, and you work very hard, like a lot of people do very successfully, or few people do very successfully in RT, and trade the hell out of it with zero emotion, not waiting for someone else. Certainly not utilizing, Siam's information, because he's playing a different game to you in this. He's got a much longer horizon. He has got legal responsibilities. He's got customers or clients or investors, that he has to placate as well. And so he has got a completely different stomach to potentially some of the people that I end up having to talk to. And the point I'm trying to make is, as lucrative as it may be in the end game, if you can't survive to get to the end game, then it's not the right game for you. And so for those that are in detail and are struggling to find the time to trade it, like the ones in RT that do and do it very successfully, ask yourself, is it the right thing to do? If it's not, it's no shame in it not being it. There's other ways to do it. But if you are coming to me and saying, I only really want to hodl, well, it's probably not the best thing. Most people in the subnet thread will tell you that hodling is not the best way to do it. The volatility is too much, and you're just going to end up getting yourself wrecked. So if that's all you can allocate a certain amount of time towards. And unfortunately, it's not for you. You've got to try and utilize something else, or accept that the returns are not going to be what others are reporting, because you can't give it the time, you don't have the speed and the dedication to get to it. So that was to answer that question there. Unfortunately, first mover advantage is always going to help a market that's low liquidity. So you're going to have that problem. And the only way to really combat that is to just actively trade it, or to just move into something else. And there's no real shame in that. Okay, so just because 90% of the group of our subnetters, D towers, etc., doesn't mean that you have to be if it doesn't work for you. At the end of the day, you got into this because you wanted to make profit. Yeah, think about that as your goal. That'll be it. I don't want to sort of dwell on that one necessarily too much. But going back to my view with the altcoins, 4 days ago, just selling out every altcoin I owned, because I just don't. I look at these charts, I just don't see the strength yet. And okay, maybe I got a bit carried away getting in today just because I saw the green candle and I was a little bit excited too. Hey, I'm only human. And someone had a word with me and said, look, you're left in the 300s. Don't be too greedy. You don't want to be that guy that waits for 240 and it only gets to 250 and it never comes. And I kind of agreed to that sentiment somewhat. So, it's just a sidestep that I've done. And at the moment, it's still profitable. And we'll see where that leads and how momentum sort of ties itself through. But I want to see some real strength in altcoins. And until that, I will shit talk them. And it's because they have done nothing to give me any loyalty, because they've shown me no loyalty to their price, and I certainly have no loyalty to them because I will drop them at their hats. So, take it with a pinch of salt. I don't mean to add confusion or anything else. Sometimes I aggressively joke about sort of the state of where the market is, but as I said at the beginning, it's more just to try and to communicate to you guys that actually, we need to be thinking for ourselves. We need to take what we see and just see if we're just fitting that because that's what we wanted to see, or because actually that is what we're seeing. And I think that's one thing that I've learned over 9 years of being in this market. I think on that we'll probably end it. Good day today in terms of price action. Even if it closed at 91,000, a 5% increase, $5,000 increase for Bitcoin in one day is something to be accredited to. And most of the other ones I'm seeing are at least over 5% on the day. So again, another very strong move from the markets. They just got to sustain it. And as strong as that move has been, sadly, the fall that's preceded it has been greater. So I will end on this one positive, which I've said a few times. The speed at which we fall often scares us, but it doesn't mean that we can't climb at the same speed. So just like when we get carried away, when things rally super quickly, and then I have to say, guys, just because it's gone up so quickly doesn't make it immune from falling just as quickly. Well, the reverse is true. We have fallen hard, and we can still recover that very quickly. As always, there'll be a trading pub on Thursday. I absolutely cast iron guarantee I will do a charting one on Friday. I'll be very tired because the Cowboys are playing until 4 a.m., but I'm still going to do it because I've missed a couple now. In the meantime, if you've got any questions or anything like that, tag me, just comment. I read most threads. I skim the subnet because I'm not into it, but I do try and read some just to see where people are. But yeah, if you got anything, love to have that chat. Please keep posting stuff. There are regulars that do, but welcome anyone posting anything. It's always good to get a different viewpoint. Like I say, things like BAT and Zcash and that, they were never my ideas. Someone else posted them and I've just sort of jumped on them. But other than that, enjoy the rest of your evening, enjoy the rest of your week, and I'll speak to you all soon. Cheers now.